Well, shares of Cava hitting a new high today. The fast casual chain doubling down on growth, now planning to open another 48 to 52 locations this year. That would bring its total footprint to 309 stores. Cava showing strong customer traffic in its latest report, with same-store sales climbing more than 11%. For more on the company, we're joined by Cava CEO Brett Schulman, along with our very own Brooke DePalma joining in on the conversation. Brett, it's good to talk to you today. We're talking about a bump in the stock today, but overall, year to date, your stock is up about 38%. What do you think investors are liking about this growth story?
Yeah, well, it's great to be with you. And I think what people are seeing is that our results are reflective of how we're able to demonstrate the power of our category-defining brand, that unique Mediterranean cuisine where taste and health unite, the extraordinary potential, the white space potential in front of us, and the way our team was able to deliver outstanding results and deliver on our strategy as we expand across the country.
Good morning, Brett. You are working towards a long-term goal of opening 1,000 restaurants by 2032. What is the right cadence of openings here? And with that projection of 48 to 52, do you anticipate that you'll ramp up in 2025?
Well, we've stated that we are projecting 15% compound annual unit growth with a goal of 1,000 restaurants by 2032. So it's actually a bit of a moderation from our 72 net new restaurants we opened in 2023, which is why we feel really comfortable about our pipeline and our ability to maintain this growth rate.
And people ordering in person at these restaurants is actually more than the people ordering online. You don't hear that too much these days as well. But as you think about the restaurant design moving forward, what is that optimal mix of people ordering online and in person? And do you anticipate maybe a shift here or an increase on either part?
We've seen it be pretty consistent, where 64% of our guests choose to come into our physical space to interact with us, and then 36% of the time they want to opt into one of our digital channels, whether that's having our great Mediterranean cuisine brought to their house or their doorstep, or coming around to one of our 31 digital drive-through pickup lanes, or simply walking in and picking it up off the shelf after they've ordered on our digital app. So we don't think it's an either or, we think it's an and. We can have great digital channels as well as great physical channels, because our cuisine works at lunch, it works at dinner, it works for singles, it works for families. So what we find is our guests, we want to give them a multi-channel environment where they can opt into their channel of choice depending on what their need is and what day of the week it is or day part it is that they want to engage with us on.
Brett, here in California where I am, we are expecting that big bump in wages for fast food workers come April, going from $15.50 an hour to $20 an hour. I mean, that's a significant bump. What does that mean for Cava? Bottom line, are you concerned that this could trickle down into other states who are looking at California, the organization among the workers, to see if the wages could get pushed higher in other states as well?
Yeah, well, we've always taken the philosophy of investing in our team members, investing in our guests, and that creates long-term shareholder value. We can go all the way back to our early days and back to 2016 when we took our starting national wage to $13 an hour, which is when many of our peers were paying $9 and $10 an hour in the markets we were operating in. We've obviously taken significant wage increases since. And so as it pertains to Southern California and AB 1228, whose predecessor was the FAST Act, we've talked about we're going to absorb that 30 basis point impact, not pass that expense along to our guests. We view it as an investment in our team that will create restaurant level growth, restaurant level margin growth over the long haul.
What's the assumption the company's operating under, though? Is this specific to Southern California, as you said, or are you likely to see, or California, or are you likely to see those wages push higher in other states too?
Well, we've always aspired to pay better than average wages and be competitive and have attractive wages in every market we operate in. We're constantly reviewing that to make sure that we're competitive and that we're attracting our team members and supporting them, whether it's with the headline wage or whether it's with supplemental and ancillary benefits, whether it's mental health benefits that we rolled out 2 years ago, paid time off to vote in the all-important election we have coming up in November, or other community service philanthropic benefits that we offer.
Brett, you guys did increase menu prices by about 3% in January of this year. What is the current average price for a Cava pita wrap or a bowl? And do you anticipate that changing once again later on this year?
Yeah, so we took about 2.5% to 3% approximate price is the only planned increase we have for the year. And as I mentioned, we do not plan to take any outsized pricing to offset the impact or the unplanned increases in California. And the average PPA is around $14, and this includes many premium attachments. So we've talked about over the course of last year, the growth in add-ons like our harissa honey chicken or those craveable pita chips and the fresh juices we make that go so well with our food. So our price point has allowed people to trade up into those premium options and still stay within their budgets.
So what's your sense on how much pricing power you still have when you consider how much your customers are still spending in stores?
Well, we think we have pricing elasticity, but again, we don't want to just take it because it's there. We want to put the best value proposition forward for our guests. We saw the data last week. Food costs or food as a percentage of consumers' disposable income is at a 30-year high. We understand the pressures our guests are facing all around them. So we want Cava to be a place where they can come and get a little relief from those cost pressures and get a great value for what they're purchasing and a great value for their dollar and a great value for their body as well.
I do want to quickly hit on the cost of your food basket right now. You guys are rolling out steak nationally this year. How will this impact the cost of your current food basket?
Yeah, so we see it as dollar margin neutral, maybe not dollar percentage neutral, but dollar margin neutral. So our steak offering is a premium item and it will be priced as such. So again, we see it as dollar margin neutral to our basket.
Brett, I want to go back to the question around sort of wage increases, but it is really about cost increases overall. We've seen more and more fast food operations integrate automation, especially with the advancement of AI. How are you thinking about that piece right now and the investments that you're making on that front?
Yeah, we want to always incorporate technology to enhance the human experience, not necessarily replace it, but make our restaurant operations more productive, be able to put that great value proposition in front of our guests. Two examples of that. One, super excited that we brought online last month our new state-of-the-art 55,000 square foot production facility in Southwest Virginia. This is in addition to our existing facility in Laurel, Maryland, where we are able to produce our chef-crafted dips and spreads, think tzatziki and crazy feta, and we're able to do it at quality and consistency at scale, taking that complexity out of the four walls of our restaurants and delivering that great value to our guests. And our facilities will support at least 750 restaurants and additional growth. So that's one example. And then as it relates to AI, we announced our Connected Kitchen initiative, which we're embarking on a multi-year journey where we believe we can take our foundational labor deployments and layer on top the use of data and generative AI models to get even more sophisticated and efficient and optimized with things like predictive prep, predictive cook, labor scheduling and inventory ordering. So again, it takes the complexity off of our team members' plate, puts them in a position to be more successful in delivering great food, great service, minimize out of stocks, minimize food waste, and bring just-in-time fresh food to our guests, which ultimately delivers an enhanced guest experience, keeps our guests coming back and coming back more frequently.
Brett, when we first chatted, when you guys went public back in June, you said that you had no plans to increase your CPG business. Do you plan to rapidly provide growth in the CPG business? Could we see dips popping up in other grocery retailers this year? And in addition to that, are you eyeing another facility, despite the fact that 750 is quite a ways away?
Yeah, so we are in about 650 grocery outlets today, and we are slowly growing that business. The new facility in Southwest Virginia gives us production capacity to have that optionality. Again, no current plans to, but look forward to taking advantage of that opportunity down the road.
Brett Schulman, Cava CEO, joining us alongside our very own Brooke De Palma. Thanks so much for joining us today.